Hello, this is Jordan, and this video is being recorded on the evening of Monday, February 21st, 2022. Thank you so much for joining me. Please like, comment, and subscribe. I'm going to have a lot of content coming in the next couple weeks. I don't want you to miss out. And in this video, I'm just going to take a quick look at gold stocks against gold, provide a couple comments. In this chart, I posted this, or I should say this was included in a video analysis I did, I think in January. And, recently we're hearing a lot of talk in gold bug circles about, the miners, they're pricing in 1,600 gold. The miners are super profitable right now. The miners are really cheap. They're undervalued against gold. And, this relationship as far as the miners against gold or the gold stocks against gold, that ratio is going to tend to follow the profitability or the margins of miners. And so the reason why in recent years, miners have really, and we're talking about the industry as a whole, while, all gold stocks, why they've underperformed gold is because, costs have been a real issue and the gold price hasn't been going up that much. And I'm just talking about, the last, you could say the last 5 to 10 years. But if we're just looking at the last 2 years or the last 18 months, just look at this chart, look at the silver line there and how much costs have increased. And at the same time, the gold price, it almost made it to 2,100. And for most of the last 12 plus months, it's been trading around 1,800. So that the margins for gold stocks as a whole, they have come down considerably. And if you look at why GDX and GDXJ, why they corrected 35-40%, you have the gold price, which came down, 10+%. And, costs, as you can see there, costs have probably increased, 10-15%, something like that. Maybe the gold price came down a little bit more. But basically, when you do the math, you can see margins are probably down 30-35%. And so that it makes sense, why the gold stocks corrected that much and why they have performed the way they have relative to gold. So the fact is, the miners are not pricing in $1,600 gold. The margins of the miners are the same now as they were when gold was 1,600. That's the correct statement. And, I've tweeted about this, but a lot of people are saying, the miners are super profitable. They're regurgitating results from the past. And we just have to be careful about that because, based on this chart, based on how they've performed, yes, the miners were super profitable 18 months ago. Right now, they're obviously less profitable. So that's just the reality. I wanted to get that message across. And, this is a historical look. This chart I also included in that January video. But, you can see there, I have some notes there in the middle. Barron's Gold Mining Index against gold. The huge outperformance in the 60s, into 1971 was because the gold price was fixed. You had a technological advancement, more jurisdictions opening up in the 80s and 90s. That was why there was outperformance there. The early 2000s, gold was up 200% there. The gold stocks really outperformed in that period up until 2004. And that was because the gold price made a big move, not a huge move, but a big move. But costs really didn't start moving up until 2004. That's when you had commodities and oil, I think, had a huge breakout. And, more recently, I pointed this out in the last video. Just look at how much the Huey to gold ratio has come down. In 2008, you had gold at $1,000. The ratio peaked around 0.55, and down to the low at the very end of 2015, 1050 gold. The ratio came down to 0.10. So it was an 83% decline in the ratio. And quite simply, gold price didn't move that much in that particular time frame. Costs obviously increased. And the last point I want to make. 2015, that was a very significant low. Depending on, what charts and data you have going back 100 years, that was a 90-year low, maybe more. But the end of 2015, I mean, that was really even gold stock valuations, in my opinion. That was a 100-year low. Okay, now enough with the past. Let's talk about how all this applies to us today as I wrap this up. And, here we have GDX against gold at the top, and we have GDXJ against gold at the bottom. And, the real key, and I've said this, I think, in the last video, 1900 is the real key. Gold breaking 1900, let's get a weekly close, monthly close. I mean, that would really confirm it. A quarterly close. So if it closed above 1900 at the end of March, that would be exceptional. It would be great to see that. And, when we get that breakout, that's going to be a springboard for precious metals in general. It's also going to be a springboard for the miners because gold is, it's a major breakout, and gold is steadily going to increase at that point. It breaks out, it trades back to the high, consolidates a little bit, a major breakout. The cup and handle breaks out, and then, you're looking at, 2100 breaks, you got 23, 2400, 3000 is the measured upside target, 4000 is the, I call it the log target, which I'll talk about in a future video. And historically, the major cup and handle patterns in gold and also other markets, I've written about this, the log target, or I mentioned this in my premium update, the log target, the market in these patterns, it hit the log target, roughly a year after the measured upside target. So we get this breakout. There is huge potential over the next 2 to 3 years for gold to move much, much higher. And again, we get that breakout above 1900. That's when you're going to see mining stocks, miners, juniors as well. They're really going to start to outperform gold. And we have the technical setup here. And you know why? Because margins are going to explode. You're going to see gold is going to accelerate when it gets above 1900. And, maybe over the next couple of years, maybe costs, gold will have a huge run and costs won't move up that much. It could, the last 18 months, costs have been going up more than gold, obviously. But maybe the next 18 months or the next 2 to 3 years, gold and silver will increase in value far more than costs will. And, that's how you get really huge outperformance from the gold stocks and, silver and the silver stocks as well. But, so I gave a history lesson here, a current lesson about margins, and I'll just leave you with this chart. I mean, this is a juicy setup, and 1900 is the key. And, we see the market take out 1900. That's when you're going to see stocks really start to move. That's all for this video. Follow all my work at TheDailyGold.com. Make sure you subscribe to the channel. Leave me a comment. Let me know what you think. And look forward to doing another update for you guys in the days ahead. Thank you.